All right, welcome back to the Hub. This is season 2, just starting it off, episode 1. After listening and discussing with some fans, people wanted some more episodes, and excited to start off the season with an episode about Bitcoin. Today's guest is Spencer Montgomery. Spencer has been trading in Bitcoin for how long now? 4 or 5 years, or at least very familiar with the market for the last 4 or 5 years. So our guest is Spencer Montgomery, and I'll let him introduce himself.
Thanks, Matt. Excited to be on your podcast. Yeah, I've been in Bitcoin since the middle of 2016, so it's coming up on 4.5 years. So thanks for having me on. Yeah,
super glad to have you on. I've seen you. I've seen you make the rounds on the internet. Some other podcasts you've been on. You have your own Instagram handle, and there you share some videos and tips about Bitcoin. For those, there might be a wide variety of people here who are very familiar with Bitcoin, who've heard about it. Maybe can we just take a high-level overview? What is Bitcoin? How did it get started? Why is it a big thing?
Yeah, that's a great question. I'll do my best to simplify it in like a minute and a half. The main thing to understand with Bitcoin is that it's the invention of digital scarcity. We live in a physical world where we get the fact that gold is scarce, real estate is scarce, rare collectible items, rare art. We understand the concept of scarcity in the physical world. But in the digital world, scarcity does not exist because everything is just ones and zeros. And so with the help and the invention of the blockchain, which Bitcoin is based off of, Bitcoin is the invention of digital scarcity. And so there's only 21 million Bitcoin that ever exist. And the whole reason that this came about is because our government and the Federal Reserve started printing trillions of dollars. And the creators of Bitcoin saw that the value and the purchasing power of our money was decreasing, and they wanted a store of value. And so that's why Bitcoin came about, was a store of value where our purchasing power maintains instead of decreases.
Okay, makes sense. So is it, how do you access Bitcoin? Is it before Robinhood and Coinbase, I guess now you can do it. Is it who's keeping track of Bitcoin? Is it a ledger? Maybe talk a little bit about the blockchain and how people are getting access to the currency, and who's maintaining the network, I guess.
So it's so abstract, and it's very difficult for people to kind of visualize how Bitcoin and the blockchain works. To understand blockchain, you have to just think of it as a distributed ledger, which is like a digital checkbook. And every time there's a transaction, every time I send a Bitcoin to somebody else, it gets posted on this ledger. And the miners, have you ever heard of a Bitcoin miner, are the ones that are validating the network. They're validating that I have the Bitcoin to send to somebody. Bitcoin miners is a misconception. It's hard to understand that, but basically you can just think of Bitcoin miners as computers that are validating that I have the Bitcoin to send to somebody else. Whereas in our normal system, like sending Venmo verifies that I have the $10 that I'm trying to send to you. Well, Bitcoin works in a more decentralized approach where you have these miners that are validating that I have the Bitcoin to send to somebody else. And as they do that, they then are proving and securing the Bitcoin network.
Perfect. I think, so it's kind of, it's kind of like an open source distributed ledger network where a lot of independent actors are verifying transactions to make sure things are legit. So it's really hard to commit fraud, I guess, within blockchain technology, which is why a lot of banks, a lot of financial institutions are looking at it. Because my first job out of college dealt with a lot of stuff of hey, we got to verify. And my wife's first job out of college too was a lot of like, hey, there's this transaction in the financial market. Let's verify it, make sure it, checks all the boxes. With this blockchain technology, there's a little bit of a different way to solve that problem, I guess.
So the whole concept of the blockchain and Bitcoin is the concept of decentralization. We live in a world where we rely on intermediaries and third parties that act as the main point person to verify transactions. So like a bank or Venmo or Square are these intermediaries that we are trusting with our money. With Bitcoin and the blockchain, everything is decentralized. So no single party or actor controls it. So like we trust with our US dollars in the Federal Reserve and the government. They're the ones that control the interest rates and the amount of money that's printed. And so we have to trust them to do what's right on our behalf. But with Bitcoin and the blockchain, everything is distributed. So no one's in charge, but the community at large. And so for anything to change, you have to get the majority of the community. But because the majority is so large, you're not going to get anybody to change the rules, so you can be sure that the rules stay the same. And
Gotcha.
That's why people value Bitcoin, is because there's no single point of failure.
That is super helpful. I have some very hardcore libertarian leaning friends, and they're all about Bitcoin, and precisely because of the reasons you mentioned, right? It is, it's not backed by government, like fiat, like the American dollar is. And so they just can't print more Bitcoin, right? Like they can the US dollar. So, and you see.
Think about.
Yeah, go ahead.
So it's all about trust. Think about how we get our news today. So we get our news today through sources like YouTube and Twitter and Facebook, which are really these distributed models where you have people all around the world that are sharing information. Well, prior to Facebook and YouTube, the majority of people got their information and their news from sources like Fox News, CNN, the Washington Post, these like major conglomerate news companies. But over the last 10 or so years, we have lost trust that they're going to give us the truth because of the concept of fake news and their focus on just radical ideas. And so people went to a different source of truth. And before we had companies like CNN and Fox News, when societies and communities were really small, news spread via word of mouth. And so we've had this progression of trust where when societies were small, you got your news from people that you trusted. Well, as societies grew, you couldn't trust everyone, so then you trusted in a localized news source or a newspaper. But then as they betrayed our trust, then we went to these sources like Facebook and Twitter. And now we're seeing them betray us with censorship. It's the same thing with our money. We've trusted the Federal Reserve and the government with our money for a long time, and now people are looking to a more decentralized approach, and that's what Bitcoin is.
Great, that's a good point. So I guess kind of stepping back a little, pivoting away, that is good overview. How, like when Bitcoin was first started, it was like what, 2012, 2013?
It was 2008 was when the white paper got launched.
White paper launched, okay. But I feel like it really took off like 2012, 2013 when, and this kind of goes back to your point about trust, Croatia, I think it was, or maybe it was the island of Crete. One of those, they shut down the whole banking system and told people, hey, you can't withdraw your cash from the bank. This is during, the European debt crisis, Greece,
Yeah.
Greek, and all of a sudden, Bitcoin got a ton of attention because, like you said, there's this huge, like, hey, the government can't touch this. There's a lot, it has some value. Like a lot of people started noticing Bitcoin for the first time. That's the first time I came across it. But, debt crisis has passed. Bitcoin kind of went back down price-wise. But it seems more and more there's been more of a willingness to accept it as, a store of value. Money has to have, if you're going to put forth a new currency, it has to have a store of value. And part of that store of value comes from people accepting it as like, yeah, no, this is a legitimate form of currency. Uh, can you talk a little bit about how Bitcoin has become more and more accepted, especially in these last couple of years?
Yeah, so you're right. It started with the European debt crisis with Greece and the bank runs. Like you can imagine, our banks say that if you have up to, I think it's $250,000 in the bank is FDIC insured. Well, what if you found out all of a sudden that wasn't true, and that your money really wasn't yours, and that the banks and the government could just take it from you? You would look for a solution, and that's what Bitcoin was for these people in Greece and the island of Crete. But more recently, especially in 2020 with COVID happened and our societies and economies shut down. But the stock market kept taking off and real estate prices kept going up. Mm-hmm. And so people are recognizing that why are assets going up, the asset prices going up, when really we should be, prices should be going down because nobody is working and people are losing their jobs. And they realized that it's because the government printed $3 trillion to thwart the decline of our economy. And so people started looking into wait, how can we just be printing money? The whole reason we pay taxes is to pay for the expenses of the government, but they can just print money out of thin air. And we don't really realize how much $3 trillion is. To do a quick exercise for you, if you were to guess how long is a million seconds, how long in days or weeks would you guess that is?
How long is a million seconds? I don't, maybe a month time wise. I don't know.
It's 11 days. 11 days.
Oh. My math is
good. A month is a pretty good guess. Okay, now guess what a trillion seconds is.
Okay, so the first one was a million seconds. Now we're talking a trillion seconds.
Yeah.
I'm going to say a month.
Okay. 31,688 years.
Oh, wow. Yeah, that's
31,688 years. They printed $3 trillion last year. So our money is not scarce. And so people are like, I want something that is scarce, like real estate or stocks. But real estate is expensive and stocks are expensive. And so they're like, what's something else? And that's why people are piling into Bitcoin, because they see that there's a lot of value there.
That's we've had this discussion even within our own family. We've talked about, getting into real estate, getting into some sort of hard asset rather than, just having money like in the bank or even within stocks, because stocks are so expensive. And, there's a sense of like real estate, like it's tangible, you can touch it, and like generally keeps its store of value. And like you said, inflation's really the concern here. If you're increasing the money supply by that much in so short of time, there's got to be some sort of repercussions. And I know, and this is kind of like where, economist background kind of, and like working for the financial institutions. I know the Fed's trying to do a lot of engineering where it's like, they have regulations with these major institutions like, hey, you have to hold a certain amount of money, and a lot of these banks that get the money, they have to hold it, but still, like you said, that's such a major source of increase in the money supply. It's no surprise that you see companies like MetLife, these other companies start buying into Bitcoin, which drives the price up.
Right. And so then people are saying, well, why would I buy Bitcoin now when it's at $40,000? It's at twice as high as its all-time high previously. Like, it's way overpriced. The thing you have to do is you have to put Bitcoin into perspective. If Bitcoin is a store of value and it's showing that it's actually a better store of value than gold. If you take gold, if you take all the gold and you multiply it by the price of the ounce of an ounce of gold, which is about $2,000, the market cap of gold is approximately $12 trillion. The total market cap of Bitcoin is only like 650, 700 billion. So Bitcoin could go 16 times higher before it reaches the market cap of gold. So in that perspective, it's still relatively inexpensive.
So I had a question I wanted to ask you that I've been thinking about. So I get the argument that like, hey, Bitcoin is by design is scarce. There's only going to be 21 million Bitcoins out there ever created. And like with gold and land, right? You know, land, there's only so much land, right? And especially inhabited land. So like that obviously puts a cap on it. It makes it, you know, limits the supply. So, but with Bitcoin, Bitcoin's digital currency, and I really thought of this when, you know, I started buying Bitcoin on Robinhood. You know, you can buy a fraction of Bitcoin. And so I guess if, because it's a digital currency and you can always just keep dividing up, you know, getting a fraction of a Bitcoin, does that really put a cap on the Bitcoin? If like you can, because I mean, you can keep dividing and keep, you know, breaking it up into decimals for, you know, for people to buy. How does that work? Does that question make sense? I don't know if it makes sense.
Yeah. So there's only 21 million Bitcoin that exist, but if you divide it into smaller pieces, that doesn't mean there's more Bitcoin. That just means that you own a smaller piece. It's like you have one piece of pie. You can either cut 4 slices or you can cut 10 slices. It's still one pie. You just have smaller amounts.
Yeah. I guess I was thinking like in terms of like money supply, each part of the pie could get worth more and more, but I guess that would mean the overall pie is getting worth more and more as well. It's always dangerous trying to think on the air, you know, and articulate what you've been thinking about, but that, I think that makes sense.
Well, the concern that people have is that if it's just digital currency, why can't somebody just create a new Bitcoin and copy it, and then you could have multiple versions, and that then decreases the value of Bitcoin. And it's actually happened before. We have examples of that, of Litecoin and Bitcoin Cash, which are essentially modifications of Bitcoin with just a slight tweak. The difference is you could create another version of Instagram or Facebook, but that's not going to have any value because there's not going to be any users. And
right.
So people can create replications of Bitcoin, but then you have to replicate the usage and the adoption. And the next closest competitor to Bitcoin, which I think is Litecoin, I think it's like a $10 billion market cap. Bitcoin has 60 times larger market cap. There's no concern that Bitcoin is going to get overtaken by another coin. Like it has already won the race.
It's kind of like this winner take all market, and because of these network effects that you're talking about, right? There's not generally going to be another Facebook because, you know, it's hard to replicate the network and all the people already on Facebook, and every time someone joins Facebook, it makes it stronger as a network. So
exactly, 100%.
So 2 questions for you. When I was first looking at Bitcoin back in 2013, my main concern was doing the transaction in what I felt like an unsecure way. I was doing research and I was like, oh, you have to buy it through this app and, you know, put in your bank details. And I was like, this seems a little sketchy. And then like 6 months later, you know, there was this huge hack at Mt. Gox, I think, which was based in Japan, where a lot of people stole Bitcoin, which I didn't think you were able to do. But I feel like those kind of concerns, like financial hacks, stealing of Bitcoin, those have kind of gone away as Bitcoin has become more institutionalized. Like I can buy Bitcoin now through Robinhood. Is that true, or should I still be worried that, hey, maybe, you know, someone can spoof me out of some Bitcoin here?
Yeah. So in the beginning, like Bitcoin was really misunderstood. It was very complicated. People thought that the transactions were anonymous. And so people didn't do enough homework to secure their Bitcoin. And so their accounts were then hacked. Bitcoin, the whole ledger was not hacked, but the individual was hacked. And so as the whole space has grown, they've put in place better safety mechanisms so people don't have that risk anymore. So if I buy my Bitcoin on, say, you could buy it on PayPal or in the Square's Cash App or on Coinbase, they all have like institutional grade security so that you don't have to worry about that anymore.
Good. Okay. Good to know. And we've talked about this in our MBA group chat, but could you maybe talk a little bit about what's the difference between buying like through Coinbase, Robinhood, PayPal?
Yeah, so Robinhood and PayPal are really great for beginners that have never bought a Bitcoin before and they want just the easiest possible access. The problem with buying it on Robinhood, and I think the same on PayPal, I'm not sure about PayPal, but especially on Robinhood, is that you can't send your Bitcoin to somebody else. You can't send it to a different exchange. You couldn't send it to a friend or anybody. In order to extract the value, you'd have to then sell your Bitcoin into US dollars and then withdraw the US dollars like you would a stock. But if you buy it on Bitcoin, you then own that Bitcoin so that you can then withdraw it from that exchange to send it to another exchange like Binance, or if you wanted to pay for something and you wanted to send them Bitcoin, you could do it through Coinbase. So I prefer Coinbase in the long run, but if you're just trying to get started and trying to play around with it, Robinhood is a fine way to do it.
So with Robinhood, PayPal, it's more of like you own, I don't want to say it's like an option, but you don't really actually own the Bitcoin. You own the dollar value of the Bitcoin, but in the exchange kind of, whereas Coinbase, you actually own the Bitcoin and you can distribute it directly to another network or another exchange or another person.
Exactly. Yep.
Okay. So maybe, I know you don't have to go into specifics, but I guess could you talk a little bit about your journey where, maybe just give us a rough idea of like, once you did your research and you felt confident, what did you experience like when you first invested? Were you like putting in like thousands of dollars, tens of thousands of dollars, and you got like, 4x, 5x? And if this is a personal question, don't worry about, answering it. But I just kind of want to give people a sense of like, your trading history. Like, what, where did you have the most success? Why can people trust you when they're listening to you? Like, and then, when we're in school a little bit, you were kind of like, well, I'd hold off, for a couple of months before I bought Bitcoin. Like, can you kind of talk us through your trading history and, your successes and maybe where some of your or your failures came into?
So this is key. So in 2016, I was part of a startup that got acquired by Microsoft. And through that startup, I made $20,000. So I was like, okay, I'm going to start investing. I looked at the market and it looked frothy and I was like, it looks like it'll probably crash. I need to what's a good investment when the market crashes? And I started researching gold and money as a safe haven. So I did a lot of studying in gold and I dumped that 20,000 into gold, and I, over the next 4 months, basically lost half of it. And eventually I came across Bitcoin as this new digital version of gold. And I was like, wow, I'd heard about it in 2013, but didn't really understand it. Right. And so in 2016, it kind of like light bulb went off. I was like, this is it. So, at that point I was kind of spooked because I'd been a bad investor at that point. And I only put 2,500 into Bitcoin and 2,500 into Ethereum. Well, as soon as I bought it, Ethereum went down by 50%, and Bitcoin went down, I think, 25%. And it wasn't until like 4 months later that I finally broke even. And then 2017 happened, and I put in about 8,000 more, so I was 13,000 in. And over the next 18 months, it turned into over $1 million. Which was life-changing. A lot of it was luck, but there was a lot of preparation as well. But then in 2018, I was so into this space that I saw so many liars and scammers and there was so much they didn't like about it. There was no product market fit for so many of these products, and it just felt kind of gross. So I sold out of everything in early 2018. And I was like, that was a fun ride, but I don't want to be a part of that anymore. And that's when I went back and got my MBA at BYU and started looking at buying a small business and trying to go the entrepreneurship way. And as I came out of my MBA program, my friend had like, hey, you need to look at Bitcoin again. And so I was doing some research and realized that the space had matured a ton, and I kind of regained that passion and love for it, and I went all the way back in. So I sold all the way out in 2018 and went all the way back in 2019, and I bought it at the wrong time, and it went down like 40% again. But as I graduated, I had been looking at different jobs and wasn't sure what I wanted to do. And ultimately, I realized like I love educating people in this space. I feel like I have a appreciation for simplifying a really complicated topic. And there's so much opportunity in this space that I feel like you can go and listen on YouTube and podcasts, and you can spend hundreds of hours to get to the level of conviction and confidence that I have, or I can really fast track you and do that in about 4 hours. And so that's what has inspired me to create my course and really just trying to help people change their financial life.
Yeah. Well, and I think people hear like your success and they're like, whoa, like he got so lucky, but you did a lot of work, and like you played in the market, and you experienced losses at first, which I felt like maybe furthered your education and drove you to research more. And this is not a market that's like, you've been in the market for 4 years, and I guess what I'm trying to say is, this is a familiar market to you. You've done your research, you know what you're talking about. And yeah, so I haven't taken your course yet, but I was thrilled to see, it launch. If you can send me the details, I'll post the details in, when I publish this episode. So if people are interested, they can sign up for the course. But yeah, how's that been going? Have you had people come? What's the feedback initially from the course?
Yeah, I've been really surprised and impressed by the response. I've had about 20 people sign up and go through the course so far in the last 2 months. And the testament to the course is that I've had a couple people that said, I'm going to put 10%, or maybe that's like 5% of my investable assets into Bitcoin. And after the course, they're like, I'm probably going to put more like 50 to 80% of my assets, because I understand the downside, which is minimal, and I realize the upside and realize that there's not a better investment at this point. So everybody that has taken has really appreciated it, especially in this last week where they saw crazy volatility, where it was down 30% in 2 days. And they're like, am I going to lose everything? And so they were calling, texting me, and I was able to reassure them. And then 5 days later, it's back to normal. And so it is crazy volatile, and it can be super helpful to have a guide and a mentor. I mean, I wish I had this in 2017. I would have saved so much money. So I just want to be that resource for people as they start this journey.
Right. Well, yeah, I'll post the information on when we publish the episode about how to sign up for the course. Yeah, I know it's been interesting to see the adoption of Bitcoin, and it is a volatile, right? It's a volatile asset, but that's because, it's still in its early stages, right? I mean, gold's been around forever. A lot of stocks have been around forever, but, Bitcoin's what, 12 years since the white paper?
It's
13
12 years old, and the U.S. only has like a 10% adoption rate. We're still so early.
Yep. So the volatility is not too surprising, but you do want to make sure you know what you're getting into. And just for a disclaimer, I'm not, recommending. I'm not an investment advisor or whatnot. But if you want to get educated about this space, reach out to Spencer. He can help you. So I guess final question I have for you, Spencer, and again, thanks for coming on. in the last year, Bitcoin has really, shot up. I think I said it's like over 300% increase in the last year. Do you expect a major pullback? You know, it, if I'm listening to this episode, my concern is, man, am I buying at the top of the market? Should I let it, crash a little bit and then keep going up? Or is it such that, hey, in the long run, like, the fundamentals are great, that even if there's a little crash, it's still going to come back up. And, the more important thing is to get educated and get in the market.
That's exactly it. I cannot tell you what's going to happen in the next day or even month. The best thing to do is to dollar cost average in, which means just buy a little bit every week. Because in the long run, I think this year we get up to somewhere between $150,000 and $200,000. And in the next 5 years, we get closer to $500,000 to $1 million of Bitcoin. So the main thing is just get in the market, get some type of exposure. You're not going to be disappointed.
Awesome. There you have it. Spencer Montgomery, giving us wise words here. And, he's speaking from experience, and, he's been in this market. So, it's definitely not my friend down the street told me to get this kind of thing. So,
yeah, and I don't want to pretend that I'm a perma bull and that I'm don't understand the risk. Like, you got to be smart about it, but it's more risky not to own Bitcoin than to own it at this point.
Yeah. Especially with the Fed printing so much money and, talks of new stimulus, another 1.9 trillion, being printed. There's going to be repercussions, and so where do you put your money? Spencer, thanks for coming on the Hub. Appreciate you. Appreciate you coming on, sharing your wisdom, insights. Again, I'll publish information about your course, or how to reach out to you if people are interested. And yeah, really appreciate you coming on. Thanks for your time.
Thanks, Matt. This was fun.
Yep. We'll see ya.
See ya.